Hello everyone, Dave Gandarillos here. This is my YouTube channel. I put out videos sharing with you ways that I'm generating streams of income online. If you are interested in finding out ways to do that, please consider subscribing and liking, clicking the little bell so you can get notified when I put out new videos. When we hit 2,000 subscribers, we're going to do a giveaway. So please stay tuned for that. Make sure you're a subscriber and you'll get the email alert when I put out the video announcing that. Also, in the video description, if you don't have time to watch everything, there is there's timestamps. So you can take a look and you could see the different timestamps and the different topics and areas of the video where you could jump around and go right to that area of the video. There's an income disclaimer here. Basically, I am not a financial advisor, so please seek out financial advice. Do not consider any of this trading advice or signals. This is not a signals platform. This is educational. So I'm showing you my my knowledge of technical analysis and my thoughts, and you should take the time to try to replicate that on your charts and practice and look for other sources of material to learn the skill set. So in addition to that, there's a list of topics. You guys have been putting in good comments about the different cryptos. What else do you guys want to talk about? Let me know. There's the list of the opportunities. I just hit $100 a day in opportunity number 2 here. Check out the video, actually the one I have up here right now, if you're interested in learning more about that. It's passive. You don't have to do anything. Just put the money in. Go in there every so often and put the money back to work for you and just let your account grow like a savings account. I'm not going to go over the opportunities, but you'll know them here. I talk about them in most of the videos, so you can check that out. Look me up on these platforms if you want to connect with me. If you want to send me a message on any of these platforms. In addition, if you're getting involved with the Forex trading software, there's a Telegram group for that. And then there's other ways to get in touch with me, such as Facebook and Instagram. In addition, you'll see other videos related to the topic of interest. So today we're going to be doing crypto charts. So there'll be videos listed in the video description of other charts I've done, technical analysis on crypto. So take a look for that. All right, so really that's all I got to talk about in terms of the video description. Just make sure you click the show more and take a look at that. We're going to move into the charts. We had a list of coins that were requested and updates that were requested. Basically, a couple days ago, I took care of Storm and Uniswap. Today, we're going to do these 4, so that'll be done. And then whenever I have to set up another chart sequence, so whenever we get a couple more, maybe I'll make another 4 charts for the next set of 4. So if you have any recommendations of coins that you want me to talk about, please consider putting it in the comments so I know. All right, so we're going to start with OMG, then we're going to go to 1 inch, then we're going to go to something called Tone, or it's listed here as TE Foods, and the last one, PundiX. There's not a lot of information, and the last 2 are kind of more low volume, lower cap, so you got to be careful. A lot of times technical analysis don't work very well on small coins or ones that don't have a lot of data. So I'll give you my opinions on it, but please be careful. Do your own research, do your own analysis, make sure these coins are something you want to get involved in. 1 inch certainly is okay, and OMG seems to be okay. But again, it's not financial advice. I'm just sharing the technical analysis aspect of this. If you decide to get into something, that's going to be at your own research and analysis of that. So make sure you take the time to do that. All right, so let's start with OMG. I did some preliminary work on these because I never looked at these, and I don't want to come in totally cold for you guys. So I did some markings of some resistance areas. Support and resistance are in white, and then I put a pattern on here, a W pattern as well, as this harmonic. Basically, this harmonic, if it plays out, says that the price should go up to D. If you, as a side note, if you take and measure the W, let's see what we get as a neckline breakout. So basically you measure from the breakout line down. So from here it says it's going to go there, and then depending on the depth, I'm not sure which W side you take. You don't know if you take the deeper one or the more shallow one. If someone knows, put it in the comments. Otherwise, I'll do some research and see. But you can see both of them are going to give you intermediate targets towards the D. So you're going to have a target here, then you're going to have a target up here, and then finally, that's, I drew that kind of wide, but basically that's the D, right? Basically this target is a D. Somewhere in here is another target. So the other thing we could do here, you're going to see resistance here. So you see this resistance? This is going to be an area that you should consider taking something off the table if you're taking a trade. So let's just, you know what we'll do? We're going to go in here a little bit and we're going to make these a little smaller because these are kind of wide. So let's just kind of tighten these up a little bit. Again, just remember these targets are ranges. It's not a specific number. You can see this wick. This is the top of the wick. That doesn't mean it's not going to stall a little bit before that. So don't try to get out exactly at the peak. Set it down a little bit below and be a little bit more conservative, and you'll do okay. So I'm going to leave this as a range between D and the peak of the pattern. And so you got some 3 upside targets. Now one other thing we could do with OMG, we could put pitchforks. We could put a pitchfork on this leg pointing up. So if we do that, just stick it right there, hit the X to the A. We could take out these extra lines because we don't know if we need them yet. Okay. And now you just tweak it. You have a couple choices, but really the only action we have is on the bottom here. So let's take off this magnet and just kind of pick the peak, the 2 points right here that we have. Well, we could adjust that as we know what's happening up here. I guess you got the choice to pick the top side peak right here as well. That seems to be mapping a little bit better. You could see some reactions here in this configuration. So let's leave that like that until we see what price action is going to do. But you can see from X to A, price action moved away to 15% or so, and then hit the median line, went right through it. Came back down, it's testing this one. This pitchfork line seems pretty strong. It went up and touched the top side, came back down, hit the median. So, so depending on where you think price is going, if you think it's going to complete the D, you could consider getting into a trade and taking some profits at these levels. Now, the next thing we could do here is we could look at this this high to low and put a Fibonacci retracement on it and see what it looks like. Go from here to here, and again, just like I've talked in most of my videos, anywhere in the 0.5 to 0.65 is a DCA area. So you can DCA buy area. So somewhere in this range you could consider buying or building a position for the push higher if you believe that's where it's going to go. Another thing we could do is we could do a fib extension. Go from the low to the high and then down to where you think it's going to pivot. If you think the pivot's in already, then we leave it right here. And like I mentioned in most of my videos, a 1-to-1 is a 1-to-1 brings you all the way up here. So we got some green skies ahead if it breaks through this peak right here. So consider getting into a trade down here. Consider cost getting out on some of these upper levels here, and leave some on the table to see if it hits the 1.0. So I'll put another green target up here. And then, as we always talk about, fib extensions can go as far as this. between the 1.618 and the 414. So you have a lot of targets on the upside. So as you build your position, I'm going to get rid of some of these fib levels here, but as you build your position into a trade, just be smart about it and consider getting out in any of these green zones. So whatever your position is, 1, 2, 3, 4, 5, maybe take 20% off the table as each one of these green zones hit. So if you buy whatever you buy, say you buy $1,000 worth, sell $200 worth here, sell $200 here, sell $200 there, and sell $200 there. And again, I always say this, but in case you're watching my channel and my videos for the first time, as this price moves higher and bounces higher like this, this is just a guess of my part. You got to move your stop loss higher. So whatever you get in here, as soon as this moves away enough, bring your stop loss to break even so you can't lose any money. Then you take it and you what next pivot that you see, bring it up here. Next pivot you see, bring it up here. Next pivot you see, bring it up here. Same thing all along the way. So now this last one that you don't, if it breaks through, that's fine, but if it turns around, you're guaranteed to close out the rest of your trade at this level, and now you've just made the profits between your entry and this level. So all along the way, you're locking in, a certain amount of profits on your trade, and you're allowing it to go further, but you're also guaranteeing yourself a profit. So that's smart risk management. Don't over leverage your account. Wait for the bounce. If it hits this area, this is a good area to buy some. Right now it's out of it. It might come down a little bit further and hit this zone. This is not a bad zone if you believe in the coin. If you believe the coin's going to go up, this is how you should consider playing out your trade if you decide to do something. That's all I really see regarding this this coin and the current price action. There is a nice W here though, which is bullish. Right? So that is a bullish signal. Higher lows, and it's pitched upward. So this is a good sign of a push higher coming. So anyway, that's it. That's all I gotta say about OMG right now. So let's move on to the next coin. All right, same thing here. I took some time and I kind of put some stuff on the chart here so we don't spend a lot of time doing stuff real time with you. So all I really see here, again, I see another W, and I haven't really looked at a lot of charts, but it might be just a coincidence on all the coins that are a W is forming on the upward. It's all bullish signal. So that's the obvious thing I see here. Another thing I see could be in play is a triangle. Let's see what it looks like. And you got to anticipate where this is going to be. Now, right now it's here. So there could be a breakout happening here soon. Then the last thing we could do, you got the target up here. We could put a pitchfork on here. Just kind of tweak this just a tiny bit, to that bottom wick there. And you can see it's kind of nice. It's following this little two line channel here. And you can see some actions here, some action there, a little pivot action there, right there, picked off there. So this pitchfork is pretty cool. Again, look what's happening here. This is ironic, kind of ironic, but not really, because it's all programmed into the algorithms. Once it moves away from the pivot here, there's an 80% chance it's going to hit the median, and look at where the median line is lining up to, the D point of the harmonic. So that's pretty good justification of confluence. That there's two reasons to hang on here. I gotta close my window. Sorry about that. We got some people outside doing guess blowing the lawn and cleaning up the lawn, so it was a lot of noise, so I closed the window. All right, so anyway, you know, having two things kind of coinciding here, where this angled pitchfork and the D, along with the median line, are all lining up, that's good news, right? So what you could do here, let's just check a couple things here. Let's just check where we are in the bounce from the C to D. So we didn't approach the 65 yet. We got to break through this. Once we break through this zone on the opposite side, because right now, if the algorithms stay in charge, it's going to push it down here. So this is a bearish zone, right? This is where the algorithms could be trying to push it down. Alright, so that's the downside, so let's get rid of that. And now the upside, you could kind of see between this current pivot here, you know, you might want to wait just to be smart for the price action to come back down here before you start getting into a dollar cost average position. Right? So you don't want to get in too quick because it still could retrace. We don't know if it's going to be a shallow retrace or a deep retrace. The price action could come down here first and have a double bottom and maybe form another W and move up. So DCA, you could wait to get entered into here. The other thing you can do, which already kind of happened, is the W formation that I just talked about. Looks like it's already in play, so you might have missed it, but if you draw it out, goes from there to there to there, currently there. So it's currently testing the neckline, right? So if you look here, it's kind of coming back and testing it. So right now would be a good, if it holds, this would be another good zone to get into the W breakout. Because it broke out, came back, it's testing the zone right now. You know, you can see there's wicks here, there's support here. So this is a pretty good support line here. So you want to throw in a support line, you would put it in somewhere around there. So it's wicking right above it, and it could bounce off and continue higher from here. So if you're playing the W breakout, you know, you can measure from here down to here, put that on the breakout. Look at that. We got a third thing pointing right to D. Look at that. Look at that. Three things. The median line, the breakout of the W, and the D formation of the pattern. So this is a pretty nice trade lining up here. So just be smart. Don't get in all at one time because it might not hold this line. It might come back down here and create, it could create a triple bottom, right? So just because it came up here doesn't mean that it can't come back down here and bounce again and break out, right? So this would be a triple bottom, all pointed higher, which is also very bullish. So consider getting into a position, but maybe buy 20% all the way down. You know, build your position in this range from here down to here, and just get yourself ready for the push higher. That's going to take you up to D. Now, depending on where you get into this trade, you're also going to have this triangle breakout. So this is also a third thing that's going to allow you to see if there's follow through. When this breaks out, wherever it might be along this trend line, you're going to want to make sure that you wait for it to come down and check, right? I drew it like you would buy in down here, but if you're going to wait for the triangle breakout, you would wait for it to break out, come back, check this 2-point trend line for support, and then get in. And so you would get in here. So maybe price action wiggles around here and stays in the zone for some time before it finally breaks out, and that's when you would wait for the check and then buy, right? All right, so again, along the way, consider buying, getting out of your trades. This looks like a little bit of a resistance zone, so you might want to throw a line on here. Support zone, it's going to be resistance on the upside. So just consider scaling out of your position, along the way. Consider some of these zones that I have here. If you're getting down here, consider maybe getting out a little bit here. If you're waiting for the triangle breakout, consider getting out a little bit over here. Consider getting out at the previous peak here. This is going to be a resistance point. So one green, depending on if you get in down here, 1 green zone, 2 green zones, 3 green zones. If you're waiting for the triangle breakout, then you got this zone and this zone. So that's what I see for 1 inch right now. So just be careful. Again, play risk management correctly. Move your stop losses higher when appropriate. Make it to break even as soon as possible, and then follow the price action higher and keep moving it higher so that if price turns, you're going to guarantee yourself a no loss trade or possibly a profitable trade, depending on how close you move your stop loss higher. Once you get your stop loss in the money, then you won the trade no matter what happens to price action. All right, next one. All right, so TE Food. So again, I warn you because there's a lot of wicks and there's not a lot of volume, and it's just a dangerous coin to be doing technical analysis with. I don't know how strong this analysis is really going to be holding for this coin, but for sure you could do the X, the X to the A. And again, look. I mean, unfortunately, right now the way price action's going, it looks negative. It looks like it's going to go down, not up. So, yeah, I don't know. I don't. Again, if you're a bear, then yeah, of course, this is turning into a decent looking trade. You can still play the fact that it might come up to the median line, but I really don't have too much to say about this one. Tone, I don't know about tone. Yeah, just don't know. There's really nothing obvious on the charts here, so just play this one on your own risk. I don't. We'll have to come back to this chart and see if it starts maturing a little bit more, or if something obvious starts showing up on here. But I don't see anything right now, and it doesn't have, like, when you start going up to like the 4 hour. Let's see if we see something on the higher time frames. Well, I certainly see a head and shoulders here. So that could be playing out right now. So if that's playing out, what's happening here is, here's the neckline. And you take the target from the head down to the neckline, and you put it at the point of breakout. So with that being said, it could be coming down. It could be coming down here if it hits the target. Let's look at some resistance levels. Could be some resistance like right here. So on the downside, you might see some hesitation somewhere around here. So if you're looking for the short, consider getting out a little bit here. It did come back and check and hold the, it came out of the neckline, came back and looked at it. So this is currently an area to get into a short trade if you're looking to do that, because it did confirm this line as support after it broke through it. So that's what I see on the downside. Again, if this pattern plays out, you have this zone up here that it's supposed to hit if it's going to complete the pattern, but I don't see enough data to confirm that's currently the case. I think we might come down here first before we ever get back up here. On the upside, yeah, I mean this would be the one of the zones, the D, and then you got the high over here that you would look into selling. And then you would consider maybe something around there. But I'm not really sure where to tell you to get in for a buy. If it were me, I'd probably be waiting for this head and shoulder to play out first and look for some positive pattern developing for the upside. I don't see it. Here's a double top right here. Look, this is kind of nice just for teaching and showing you guys. Nice double top, right? And it was slightly pitched lower, so it broke out nice. Headed downward. Neckline. You measure it here to here. Put it here, and it just missed it. But if you look for resistance and stuff zones down here, you probably will find that there was an area of resistance. Yeah, see, there was an area of resistance right there. So even though this pattern says it's going to go down there, you got to look left and look where wicks were happening and where there was some resistance on the upside. And right here would have been where your target should have been set, not down at the pattern. This is just a rule of thumb where the price can go based on the pattern, but you gotta see what supersedes that pattern target is typically the resistance and support lines that you have developed over time in the price chart. So again, this is kind of nice just to show you guys how this this M played out. And then on the other side, right here, right next to it, you went from having an M to now a W. You have a W right here. This led right into a W, and then it broke higher. This is actually very nice for teaching. So you see that the breakout. Take the measurement from here down to the bottom. Take that line, put it here, and you can see the target on the upside was hit. And again, this kind of lined up exactly with some resistance areas. See this right here? This from like here. So from previous price action, you see the wicks. See the wicks? This lined up perfectly with the target of this W pattern. So believe it or not, out of everything else that's on this chart, M's and W's seem to be playing out well. So look for M's and W's. Again, if you zoom in here, we have another M, which is negative, which coincides with this head and shoulders. So another M over here. Basically right from here, down to here, up to here, and then down to here. So this line gets extended, just playing M's and W's both ways, which is pretty cool. So that would be the trades I would do. I would look for M's and W's and look for the breakouts of double tops and double bottoms in here. There's a nice big range happening between these two zones, and you could play the entries right in the middle, the median of that zone. When it breaks down, look for a sell. When it breaks up, look for a buy. Now when it's breaking down, once it finally breaks down, because right now it's holding this line. Once it finally breaks down, then you look for another sell. It's actually a really nice chart when you really start looking at it. I was looking at like wedges and triangles. There's nothing like that really happening, but there's M's and W's all over this. Three in a sequence of each other. One here, double top, double bottom, double top. Now we're looking for a double bottom. So, all right, so that's what I see for tone. Right now it's negatively biased. If you're looking to trade the downside, then wait for the breakout down. If you're looking to trade the bull side, the buy side, I would wait for price action to come down here. And based on this historical thing, you might see something like this down here. And then on the way up, as it's breaking out, got the upward double bottom. As it breaks out here and checks, that's where I would take a trade right here. And historically, it's been topping out around here. So this green zone right here would be your sell, the D. So MWM anticipated W coming. Let's see what happens. We'll come back to this in a couple. This is on the 4 hour, so it's going to take, you know, some time here. I just randomly drew this. I don't know how fast or how slow it's going to take. Let's see, for example, how long it's taken in the past. Take a measurement from here to approximately there. 27 bars at 4 hours a bar. 27 times 4 divided by 24 hours in a day. Pretty much 4 to 5 days. So if this breaks out, you know, 5 days later, you might be looking for some type of signal to buy. Look for a double bottom in an upward sloping fashion, and we'll come back to it. We'll do this next midweek next week. We'll come take a look at this and see how things are forming. This may, just because it's happened like this in the past doesn't mean that this is going to happen again. Right? It might just totally blow out of this channel that it's in and go higher, but there is a nice channel of trading here. And as long as it stays within that channel, you could possibly get involved with M's and W's. All right, next coin. Yeah, so there's really not a lot of data here. Yeah, I have it on the weekly chart as we drive down. You know, get a little bit of information, but you don't have a hell of a lot of information here. Yeah, I really don't see a lot. I mean, I really don't. I want to see something, but I don't. I mean, the only thing I can draw on here maybe to kind of maybe not really force it, but put something on this chart would be something like this. This pattern here. Let's zoom in and see. Yeah, I mean, this is cutting the I don't know. I feel like I'm forcing this a little bit, but this is all I really see on the chart. If you take the trend line from the A to the B, you move it over here to possible breakout. It looks like it's going to be possibly negative here. Wait for the breakout, and these are the two targets. See if we can put in some lines here of support and resistance. See some obvious ones. This seems pretty substantial there. This one seems kind of like it could be one. It's got so many wicks, it's so hard to deal with. You know what? Actually, I keep forgetting to tell you guys. One thing you can do is, if you have all these wicks, is just make it a line chart. When you make it a line chart, you take all the noise away, and you can really start seeing where things are happening. So this is a good technique for this one with all the wicks. That's all I really see. So you got a couple on the downside. Let's see, is this one here? You might get one there too. Again, there's a lot of you can't go crazy with all these different lines of resistance and stuff, and we don't have a lot of historical data to base it off of. So you can only do what you can do here. You got the triangle pattern. You can go back to looking at the candles, and you got some lines here. So these, depending on the breakout, these are some areas for sales on the upside. Once you get into the buy, consider scaling out of your positions along the way here. Looks like a pretty other than here, you got this bigger pattern target. These seem to be very looks like every 15 cents almost you have a resistance line. So wait for the breakout either up or down, and then consider, like, you got 5 zones, 1, 2, 3, 4, 5. So consider zone, getting out of your trade at 20% increments. So whatever you bought, if you bought 1,000, get out every $200, or just kind of figure out what's right for you in terms of selling. On the downside, again, you can go crazy and put all the different zones in here, but the major ones I see on the downside, if it breaks down, are these right here. Certainly this A, right here, this A is going to be a point of problem. Here, this C is probably going to be a little bit of hesitation. Again, you can get crazy with all these lines, but just to give you the same on the downside as I gave you to the upside, here's 5 possible zones of, whatever your position is. Consider scaling out 20% on the way down. If you get in right here, 20% out, 20% out, 20% out, 20% out, let the rest run. Move your stop loss down or up accordingly. So this is what I see happening with this one. Again, there's not a lot of information. There's a lot of wicks. It's low volume. Here was a big spike. Otherwise it's down here in the noise floor. So just wait for the breakout, wait for confirmation, wait for some spike in volume, and then either play it up or play it down depending on how it breaks out. I really thought it was going to break down, but now it's wicking back in. It's right at the apex. If you do wicks, you can argue that this is what it should look like. But if you want to get closer to the bodies and not play with so many wicks, you gotta kind of fake it a little bit here to get it to be closer to the bodies. Same thing on the downside. If you really want to do it, you could go down to that wick, get 1, 2, 3, 4 touches. Got 1, 2, 3, 4 touches on the top. So this is where it could be right now, and you're hitting the 80% apex of this triangle, so it's getting ready to break. Either that or this triangle we have drawn wasn't a real triangle. It just didn't follow the triangle pattern. Just because we draw this on here doesn't mean that it's going to follow it exactly. So yeah, so for the limited amount of information we have here, this is all I can see in this chart. So there's a couple, top side you're looking at 6.75 or so. Bottom side you're looking to go down to, if you go down to the target, it's 4.3. We're currently at 5, so you're looking at, a good 20% move, right? Is that about right? $630 divided by 554, 13 to 14% move in the upside or downside, approximately. So you got a decent trade here. If you have leverage and you want to do it on one of those exchanges, you can make more than 13%. But if you're looking to just get in for no leverage, you could probably go for a good 5 to 10%, maybe 7.5% to be safe on either the upside or downside here. And with that, that's basically all of them, I believe. I think we went through all 4. Again, I'm sorry it was a little longer because it was kind of like the first time I'm looking at these. I think I looked at 1 inch in the past, but I didn't do any substantial analysis on it, so it's kind of the first time for me. But this is what my thoughts are on these 4 coins. Make sure you practice this on your charts. See if you agree with what I did here. See if you see something else that we missed. Certainly put it in the comments if you see something different. Again, it also depends on when you see this compared to when I did it. So just keep that in mind as well. But yeah, so at a minimum, there's a couple patterns in play here. You got a triangle here. You got a couple incomplete harmonics that might play out. You got an M currently looks like it's failing right now, but it might just be consolidating, waiting for the push down. So you could look for the M breakout down. You could also play the D completing on the bull side. And this one's right in the middle of the triangle waiting for a breakout. So I'm going to get this out to you as fast as possible so you could see these. Maybe catch something on your side if you decide you want to do it. So with that, have a great weekend. Consider subscribing to my channel, liking, sharing, clicking the little bell. When we get to 2,000, we're going to do a giveaway, some crypto. So practice, guys. Take care.